Imagine a flower so powerful it could bring down an entire nation, not through poison or magic, but through pure desire. This is the story of Tulip Mania, the first and most bizarre financial bubble in history. It all starts in the early 1600s. The Dutch Golden Age. The Netherlands was the richest trading empire in the world. Its ships brought back treasures from every corner of the globe, and its cities buzzed with wealth and innovation. But amidst all this prosperity, a new obsession took root. The tulip, originally from the Ottoman Empire. These exotic flowers captivated the Dutch elite. Their vibrant colors and unique patterns were unlike anything seen before. Owning a rare tulip, especially the legendary Semper Augustus, with its fiery red streaks on pure white petals, became the ultimate status symbol. It was the 17th century equivalent of owning a supercar. Soon, everyone wanted in. It wasn't just the rich anymore. Craftsmen, merchants, and even farmers started buying tulip bulbs, not to plant them, but to sell them for a profit. Prices skyrocketed. A single rare bulb could be worth more than a grand house on an Amsterdam canal. People were trading their life savings, their homes, and their futures for a flower bulb. But here's where it gets really wild. Tulips only bloom for a short time each year, so instead of trading actual flowers, people started trading promises. They created futures contracts, pieces of paper that guaranteed the right to buy a bulb at a set price later in the year. People were betting on the future value of a flower they hadn't even seen. The market was no longer about tulips. It was about speculation. Taverns turned into chaotic trading floors where fortunes were made and lost in a single night. The entire nation was gripped by what historians now call tulip fever. By the winter of 1637, the madness reached its peak. The price of a single bulb could equal 10 times a skilled worker's annual salary. People exchanged land, livestock, and entire businesses for these bulbs. It seemed like the prices would go up forever, but they didn't. In February 1637, at a routine flower auction in the city of Haarlem, something snapped. A seller offered a batch of bulbs, but for the first time, no one would meet the asking price. A wave of panic swept through the room and then through the country. Suddenly, everyone wanted to sell, and nobody wanted to buy. The bubble had burst. Within weeks, tulip prices crashed by over 90%. Bulbs that were once worth a fortune were now just worthless plants. Fortunes vanished overnight. People who had been rich on paper were left with nothing but debt and a handful of dirt. The Dutch government tried to step in, but it was too late. The damage was done. The greatest trading power on earth had been humbled by a flower. The tulip itself hadn't changed. Its beauty was the same. What had changed was human perception. The symbol of wealth had become a symbol of folly. Tulip Mania became a legendary cautionary tale. It showed the world how markets can be driven not by logic, but by emotion, greed, and herd mentality. It was the first documented proof that when prices disconnect from reality, a crash is inevitable. And this isn't just a quirky story from 400 years ago. Think about it. The dot-com bubble, the 2008 housing crisis, the wild swings of cryptocurrency and meme stocks. The pattern is eerily similar. We fall in love with an idea, we convince ourselves that this time it's different, and prices soar to unsustainable heights, only to come crashing down. So, the story of the tulip is a mirror. It forces us to ask, have we learned anything at all? Or are we just waiting for the next beautiful, useless thing to capture our imagination and lead us into the next bubble? History, it seems, has a habit of repeating itself. Thanks for watching, and if you enjoyed this story, don't forget to like and subscribe for more deep dives into the past.